So we'll go ahead and get started. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for June 14th, 2019. We got about 20 minutes, a little bit less than 20 minutes until the markets close here to close out the week. All right, so SPY just about flat there, and the Qs down 0.3. We had a small gap down, a little bit bigger in the Qs, primarily caused by the AVGO gap down. Okay, we had the AVGO gap down, and that brought a lot of the semis lower with it. Okay. We'll go over the AVGO a little bit more, but let's talk about what to look forward to next week. Okay, next week we will be essentially using the same levels that we used coming into today. Okay, we're going to be using the consolidation here on the hourly, the high from yesterday and then the low from today, 182.70 there. Today's low reached 182.50. So the low from today, 182.50. We're still stuck in this sideways range here on the Qs and SPY. Okay, if you recall, coming into today, we had a neutral bias. Okay, I got a question yesterday that, okay, if I say that we have a neutral bias coming into today, does that mean that we're going to get a narrow range day? And I said that that's one option. Also, in a neutral bias, we could get a breakdown, and the breakdown gets no follow through, or we get a breakout, and the breakout has no follow through. Essentially, sideways price will be maintained even if the market explores higher or lower. Of course, it could be wrong. We could get follow through, but that was the expectation. Now, the way that it played out today is that we've gotten another narrow range day here. So actually turned out that we did get a narrow range day, and in order to maintain the narrow range day, range expansion is not going to follow through here. So you can see initially tried to break out this morning, came right back down. I think even the Qs, did the same, and then right back up and then right back down. Now we're trying to go up, right, and Qs trying to erase some of those losses. SPY is still just about flat from yesterday. Okay, now there will be days where I'm bullish or bearish and we do get narrow range days, but I think as far as coming into today with the right expectation for the market, you can see SPY here absolutely unchanged here, up 2 to 3 cents. That I think being neutral here is the right thing to do. Now, the more that we base up here, the more bullish it becomes, right? Looking like we get a pause that might refresh. Now, we're looking for some bearish follow through, and we didn't get it. So when the bearish from the selling, the sell-off did not occur, and we did not get follow through to the downside, right? And we saw that we moved back up. We canceled out that hourly pivot, so we went to neutral. All right, and the longer that we base up here, the more bullish. Okay, so really not that different than today's bias. Going into Monday, going to be neutral using the range that we put in here on the hourly, as we have just been essentially sideways for 3 days now, right? We're still stuck in this range here, very tight range. You can see the contrast from where we came from. Nice uptrend there on the hourly. Okay, so just looking at it, reading it how it is. Okay. All right, so let's go ahead and start with this AVGO here. And we talked about yesterday that when you get a break of the opening range, and so in this case, you have the 1 minute range established here, right? And then you break out and you get follow through, that you do not want to try to fade it. Now, it looks like there was opportunity here maybe to catch a little bit of a short, but once it recovered there, you can see the grind, the basing at the highs, and the breakout there higher. So once this proved to you that it did not want to come in, right, that's the kind of thing that you don't want to be trying to pick tops in, right? The examples that we used yesterday were about trying to pick a bottom. Now, if you were looking at this ARQL, for instance, okay, what happened? We broke out of that opening range. Here's the 1 minute consolidation, and then we break below. There's a new low, and then we put in another new low and another new low and another new low. So what did we discuss yesterday? Do not try to play this long on the first setup. Okay, these typically do not follow through. What would this have been? What would have made this better if we say broke right there and then it stopped and then based, right? Or even it can reject that new low, go right back up, and then you can play it as it breaks back up to the other side. That just means that lower prices were rejected in a hurry there. Okay, so this, right, is not the kind of 1 minute buy setup. There will be ones that work, okay? Just know that in the market, there's nothing that is 100% absolute, that this pattern will fail every time, but more often than not, it does. And that's just, the way things are now. Could things change? Could this become a very viable entry in a different environment, on different types of gaps? Yeah, sure, right? It could. And we're open to that, and we will watch them. If that starts to occur, we'll be aware of that, right? So now what does a second entry mean? So again, right, like you're not going to be picking this bottom, right, as it pokes below. Okay, now we saw a rally, right? Then you can see there, this is transitioning out of the downtrend, okay? Something else that I wanted to go over today, just a little bit more unique. Honestly, not my strategy here, but we had some stocks that were putting in big gaps. You can see this MCRB was down 20%. The gap itself was also rather large, not all this. In fact, since the open, this was getting bought, right? Is we had some plays that were long-term novice that were okay, that were good to fade. Okay, that ended up being the play. Now, I don't fade gaps very often, so these are the kind of things that I don't do. And if I see more of them, then we will start to play them more and call them more, right? MCRB stayed pretty strong and was uptrending pretty much after the first 15-20 minutes, okay? On the other hand, we had the ARQL, big gap up. See here on the short term here, again, right? Here's the monthly. Long term is getting novice, right? Long term is getting novice. Already moving up, starting to be extended, getting late in the move, right? So that makes for potential for this to be played as a short. This worked better, right, as a short, even though short term, in the short term here, was still professional. Just very excessive on the gap. Only needed a gap to about $8, just shy of $8. Ended up opening up at $9, so a whole dollar more. Now, for something maybe like the Facebook, gapping up an extra dollar over the resistance is not a big deal, like for the Facebook. So how do we want to measure this? Look at the average range, okay? And if the symbol is gapping above where it needed to gap to, not necessarily from the previous day's close, but where it needed to gap to, it's gapping more than an average day's worth, maybe 2 or 3 times. If it's 2 or 3 times, it's excessive. Okay, so then in that case, you don't want to be aggressive on it at the open. So even on the ARQL, wouldn't be something that we'd be trying to play on a 1 minute buy setup. But just showing you there that when the 1 minute range breaks and you get multiple new lows, that the selling is for real, as in the case of the ARQL. So in the case of the ARQL, let's say, average day, maybe 60 cents. All right, you could look at an ATR if you want. 60 cents, this was gapping almost 2 days worth of, and I'm even picking a decent sized bar there, 2 days worth of trading already gapping above the resistance by that much. That's going to be excessive. That's going to kind of reduce the ranking of this gap as far as a high quality gap, okay, on this ARQL. So that's one way. That is part of our gap ranking system. We look at it to see if the gap is excessive or not in comparison to where it needed to gap to, right? There is no set percentage to say this gap is significant, not significant. It's really just a matter of where is the resistance, okay? Give you an example here. This one you can see here was a gap up, right? I don't remember the size of this gap, but wasn't a big gap, right? But it gapped just enough to clear the resistance. Okay, now if this had gapped, you know, it only needed a gap to this area and gapped multiple days worth, right? That's going to be excessive. This gapped right to where we would want it to break the resistance. Okay, so in the case of the ARQL, right, only needed a gap to around $8, ended up opening at 9, right? That's going to be too big, okay, based on the average range that it puts in. Okay, so but I thought we had some interesting fades based on long-term charts being novice. That would be the ARQL and the MCRB. Okay, that the long-term trends were showing that they were starting to get late into the move, right? And that you know, the selling was well underway and started prior to today's gap. Okay, so you know, I'm kind of bringing this up for you and for me because this is not fading the gap, playing as a long-term novice gap. Not my primary strategy, but you know what we do on a daily basis is not just take the plays, manage the plays, but keep our eyes open for plays that worked that we should maybe be adjusting to. Okay, so it's always important that we are aware of what is working. I just noticed today we had some good long-term novice gaps that followed through. Okay, so that's going to do it for this week. Do it for today's market wrap. Going into next week, neutral bias. We'll see. The more that we base, the more bullish. But for now, we'll stay neutral. Okay, just using the last today and the previous couple days as the range. And if we break out above the range, we're going to switch to a bullish bias. If we break below, switch to a bearish bias, okay, for the short term. And then on the long term, weekly, monthly, on the Qs and SPY remain bullish. Okay, so long term remains bullish, short term neutral. All right, so I hope you guys have a good weekend. We'll get back at it on Monday and see what the market brings us. All right, have a great evening.